And we're back with another market update here in Q2 of 2022. We're talking steel, raw materials, global implications. We've got special guest Chris Billman from Majestic Steel to talk with us today. What's up, guys? Welcome to the Metal Roofing channel. I'm Barnette. Make sure you subscribe if you're new. We release metal roofing and metal construction content every Monday and Wednesday, and we're back with Q&A Mondays here. We've got a metal market update as we enter quarter two of 2022. I've got Adam Mazzella back with me today. Thanks, Adam, for being here.
Thanks.
And we have Chris Billman from Majestic Steel, and he is a market research manager there. Chris, thanks for being here today.
Absolutely, glad to be here.
For sure. So we're talking a little bit about the metal market, steel, aluminum, raw materials, whole gamut. And we're going to start with Q1 and kind of give a recap of what that has looked like. So Chris, can you give us a recap of what Q1 looked like for steel and some raw materials?
Yeah, absolutely. I mean, after the previous 18 months starting mid-2020 through late 2021, where steel pricing was skyrocketing, hitting record highs almost on a weekly basis, we saw the market turn and a slowdown in pricing where through November, December, and into Q1, we saw pricing come back almost half of the gains that it saw the first 18 months of the cycle. It's a combination of people buying offshore, the domestic market getting too high, and then just no buying at all, kind of a buyer strike that we saw in the market that led to the downturn in pricing.
Yeah, definitely. And Adam, can you talk to a little bit about what we told our customers at that time, as Q1 finished up?
Yeah, and I think we were really talking about things being at a peak, and we felt that they would start to soften. We always talk about, hey, we hope it comes down gradually. We hope it doesn't jolt down. It came down fast, but at the same token, I think everybody had finally received a lot of late inventory, a lot of offshore material, which kept inventory prices high, costs high, which really in exchange didn't translate into a real big benefit for buyers downstream. You had high price inventories, as Chris mentioned. Then you had kind of this buyer strike, but there really wasn't a big window for this quote unquote buyer strike where there was a lot of people capitalizing on that.
Yeah, absolutely. I mean, you talk about the buyer strike, but the delays in offshore material as well. A lot of that stuff was bought in September, August of 2020 when the domestic market was peaking, but combination of the long extended lead times, the port congestion, it just extended the time frame of when that material was hitting the market. We're still kind of seeing it in the import numbers today, and that stuff is, you have to remember, was bought 5-6 months ago.
So now we're at the end of March, early April of 2022, and we're seeing increases in the price of raw materials and some other things. So tell us where we are now. What has this led to?
Yeah, we are seeing a sharp turnaround in pricing going back to the middle of February, kind of right when the Russian invasion started of Ukraine. Pricing around the globe shot up almost instantaneously. A lot of that was driven by raw materials, particularly scrap, pig iron, and down into coking coal and iron as well. So both blast furnace and electric arc furnace production was getting hit hard. There's just not enough supply around the world to make up for that raw material production in that region. You add that to the Russian sanctions, and then there's just fears of supply shortages and rising raw materials. And the domestic mills and the global mills kind of took advantage and pushed pricing up, and it's skyrocketed from there.
Right. How can the market get more volatile, right? That's kind of what we've seen as we've entered into this Q2 of 2022 here. Talk to me about scrap and pig iron and other raw materials. Explain to our viewers why that's so important when it comes to driving price and cost of these other materials.
Yeah, essentially scrap is kind of double-edged sword to what happened to that market. Pig iron is kind of a scrap alternative. The United States imports about 60% of their imported pig iron, about 4 million tons a year from the Ukraine, Russia region. The balance of that usually comes from Brazil and Canada. There's just not enough production in those regions to make up for the demand domestically here in the United States, but also if you think about Europe, they're getting hit just as hard as supply shortages for everything. So that skyrocketed pig iron pricing from around $600 dollars a metric ton to now well over $1,000 a metric ton. And comparatively to scrap, there's usually historically a $15 to $25 premium of pig iron over scrap. I mean, if you think about that, that would push scrap pricing up to almost $1,000 a ton. We're currently just under $700 a ton for prime scrap as we sit today. But when you think about where prime scrap's generated, it's the manufacturing sector, particularly automotive, and that continues to be hampered by the chip shortage and other issues. So the generation of prime scrap continues to lag. The demand is there because the mills want to push out as much material as they can, whereas scrap alternative pricing are skyrocketing. It's kind of all came together and pushed scrap pricing up significantly. In March, we saw the largest month-over-month increase for scrap pricing on a dollar basis ever, and that even goes back to 2008. That's a key raw material for steel making and ultimately what set the floor for finished steel prices. So the sharp increase we saw there is only pushing finished steel pricing higher as well.
What does that mean for steel? We see those raw materials, we see those prices. What does that mean for steel when it comes to Sheffield Metals customers, really any steel consumer?
Kind of making a differentiation between some of the things Chris is saying. So when you're talking about pig iron and creating a higher quality product, pig iron is going to give you a better product out of an EAF furnace than a lot of the scrap.
Electric arc furnace, right?
Yes, electric arc furnace, than you would out of other things. So that's one thing that we're keeping an eye on as well. Typically, we can get a good coated galvalume product, and it doesn't impact shape too much. You put paint on it, so it's really not going to impact the integrity there. But when you look at automotive and the longevity of that, that's one thing that could drive it up even further is the demand for that prime scrap that Chris is talking about. So what we typically tell our customers is, we're still kind of at the peak with our pricing. A lot of our inventory is that quote unquote peak inventory. We don't know how high the market's going to go in Q2 and beyond. There's a lot of things happening in the market right now, whether it's geopolitical, whether it's geographical, whether it's supply chain issues. All of these things continue to happen. If the chip shortage resolved itself tomorrow, that would put additional pressure on steel mills and cause additional inflated prices, additional demand. So until some of these things in the supply chain fully correct themselves or quote unquote stabilize, it's really difficult to say, hey, this is what's going to happen. I think as far as Sheffield customers go, you can try to beat increases, but there's no saying that you'll actually beat it. If you're planning on speculating for 3 months out or 6 months out, things like that, you may be able to beat it, but it might be a bad bet. So typically we tell people, particularly with the allocations that are in place with a lot of our products, buy what you need. Don't go overboard. Beating it could extend your cash, could cause additional issues down the line.
So we've talked about supply issues. What about demand? Are we still seeing increased demand for steel, both in architectural and other markets?
Yeah, I would say it's pretty steady. We saw, going back to COVID, right after COVID, the demand never really fell off as much as people were expecting. It remained relatively strong, especially on the construction side, particularly whether it be home projects, new builds. We saw a decent drop on non-residential, but that has come back now. The most recent Architectural Billings Index came out yesterday. It's still over 50, which signals expansion for that market. It's been over a half year now of continued months in expansion. So that usually pulls appliance along with it. Agriculture is pretty strong. The two sectors that seem to be lagging behind, auto for reasons we talked about, and the energy market for different reasons, geopolitical reasons and whatnot. So, but overall, steel consumption, particularly on the flat rolled side domestically, is strong and I think has potential to grow, whether back half of 2022 but into 2023 for sure.
So we touched on it before, but what does the Russia-Ukraine conflict look like for us in the steel market and that steel world? What is it doing right now?
It's kind of a change and shift in the supply chain. We saw a major change where raw materials are coming from. As the United States is probably one of the most self-sufficient countries in the world when it comes to raw materials, but even we're not isolated from global incidences. I mean, if you think about the European market, they rely heavily on Russia, Ukraine for oil, for other key raw materials, steel in general, slabs. Russia is one of the major slab semi-finished steel exporters in the world. So it's kind of just shifting where that consumption's coming from, where that demand's coming from, where the supply's coming from, and it's just kind of threw a shock to the system of the global market.
So is it possible for some of that production to come back online if this ends soon? What does that look like?
Yeah, if you were to wave a magic wand and end the war today, the damage is done. I mean, the infrastructure is ruined. There's cities that are just leveled. We heard reports of multiple steel mills just getting shelled, completely destroyed. Other pig iron facilities getting destroyed. That's stuff that just can't come back. If you're a mill and you can produce 100,000 tons a year, you can't just automatically just start producing 200,000 tons a year. The scope of a project to build a mill, a new furnace, is extremely extensive and extremely expensive. So that's just not something that can come back tomorrow. And then when it comes from the sanction side, on the Russian side, would there eventually be some easing? Probably, but I don't think they would just turn around and lift those immediately as well.
So we've talked about in some previous industry market updates about some domestic mills coming online, maybe increasing capacity here in the United States. Is that something that we're seeing or going to be seeing?
Yeah, we've definitely seen a new flat rolled mill in Sinton, Texas by SDI, some new investments. U.S. announced a new flat rolled mill in the Arkansas region. Nucor announced one in West Virginia. It seems to be a lot of the talk of new capacity, added capacity domestically was always seen as kind of a negative. But I think this market that we've seen the last 2 years, it's almost a positive. We should be able to rely on our domestic industry. If you have to rely on foreign governments, whether that's China, Russia, other unsavory players that you really don't have control over, it really could put a wrench in the system very quickly.
So how does that tie in with 232 and import tariffs on materials like that?
Yeah, we've seen it have a major impact when it was first put into place. The 10% tariff on aluminum, 25% on steel. We've seen it was never meant to stay forever. It was kind of just a blanket tariff to kind of put stop to everything and then kind of figure it out from there. We've seen one-off agreements. We saw an agreement with the European Union where it changed to a tariff rate quota, meaning you can bring in so much material. After that, then you get hit with the tariff. Just this week, there was an agreement with the UK. But like I said earlier, that those global markets are so shook up already that pricing, we've even seen instances where the European market has come to the US looking for the US to export material to them, something that we never would have forecasted in any scenario. So it's kind of just shaking up the whole global supply chain has been shifted.
And in our last video, the future outlook looks very different than what it actually has come to pass. So what are we looking at now, and what can we kind of potentially expect going into Q2 and some things to think about? For
steel pricing, we're definitely seeing on the rise. I mean, we hear the word inflation pretty much every day in almost every conversation now, and that the steel market is no different from that, from the raw material side. Through finished products, we're seeing price escalation. But as we move forward, like you talked about the auto market, if we see relief in the chip shortage, that would be a big pull for demand there. We're also watching what the Fed does with the interest rates. We've already seen them raise them once. They've talked about minimum 7 or 8 times they're going to do it. If interest rates get back up to 3.5%, what's that do to consumption? I was looking at a trend the other day, and for every time the Fed raised rates, the stock market almost inversely came down a little bit. And I was reading that every $100 the stock market came down, 100 points, it was $3 less consumer spending. So does that have an impact? Eventually, probably. If you're spending $100 at the pump, you may not be saving for a new refrigerator. So that's definitely a headwind we're watching, inflation, interest rates, but I think fundamental demand is there, and like I talked about earlier, the potential for increased consumption is definitely in the market.
Yeah, that's a good point about demand. And Adam, can you talk to that as well about maybe Sheffield Metals customers, builders, designers, people like that are looking at commercial buildings, residential buildings. What do we see going into Q2?
So we're coming out of the winter, so the building season really is kind of kicking off already. We are seeing demand on par with what we'd expect for this time of year. What I would say is going into the winter and now coming out of the winter, we kind of have new things at play. And what I mean by that is we're out of allocation on steel. I am envisioning steel allocations coming back, though. We are in aluminum allocations. We didn't have those previously. And then the whole market is really in PVDF or paint allocation mode. So we're trying to get new creative ways to get the same job done and be effective with it. We think demand is going to be there. We think that the 2022 year is going to be a strong construction year. Chris hit on the architectural index. We keep an eye on that as well, and we feel really good going into 2022 in the construction season. I think the drawback is at what point will the market cry uncle? We talked about kind of that steel strike. That started to kind of have some creep in there. I'd say in late Q4 21, early Q1 22. I think we're anticipating prices either getting back to where they were or even above and beyond that for 2022 from a Sheffield customer perspective.
And I would say more than ever now is the labor market's having a major impact. So the other day, there's like 11 million open jobs. There's only 6 million unemployed people. It's almost a 2-to-1 ratio of open jobs to people. So not only finding labor, but finding good labor. And the cost of that labor is going to have a major impact throughout the market as well.
Adam, can you expand on aluminum a little bit more?
Sure. So, the aluminum squeeze kind of is following really every other commodity that we've seen. There's been a lag with the aluminum demand from steel, but really what's happened with aluminum is steel mills, not just domestically but internationally, are kind of saying, hey, there's a finite amount of product that we can make, so that's going to create additional demand, additional price on that. So what we're seeing is it's more difficult to get more narrow widths. So where we were previously able to get all of, really whatever widths we needed, we're having to get creative with it. So 40-inch wide, a lot of aluminum mills are saying, hey, we just don't want to support 40-inch wide unless we jack it up to a number that exceeds the 48-inch price. Then we look at it and say, well, can we get creative with it? What do we need to do? So we're trying to navigate a lot of challenges with respect to the supply chain and aluminum. I don't think we're unique in that matter. I think whether you're creating a consumer product or an architectural product, aluminum is going to be a challenge. What 232 did with aluminum was made it harder to get certain types of aluminum. We responded, we reacted, we've provided as good or better of a product since then. I think it's just going to be something that you got to get creative with, take in stride, and figure out a way to navigate it.
So, Chris, Majestic Steel sells to a wide range of people, and can you kind of explain what you tell them to do with this type of information?
Yeah, we like to use a football analogy. We kind of sit at the 50-yard line where upstream we pretty much buy from every domestic supplier, North American supplier, some foreign where it makes sense, and then sell to every end use. We always tell, going back to what you said, tell our customers, buy what you need. Don't overextend yourself. Let us manage your inventory for you. I mean, that's kind of what we're here for as a service center. Let us hold the inventory. Let us take the risk in managing the market for you. That's what our number one value proposition is having the inventory when you need it at the right time.
And similarly, Adam, what do you tell Sheffield Metals customers going forward with this information?
Be smart with your bids. Be cognizant of escalation clauses that you want to include in your bid. The more you communicate, the more you educate a building owner, homeowner, architect, general contractor, the better you're going to be. If anything, the last 2 to 4 years have really taught us is that there is extreme volatility out there. There's a place where everyone can be, not just break even, but be prosperous and be productive. I think you want to try to find a win-win solution for everyone. So let's say you put a bid in today, price of steel goes up 20, 30%. You want to make sure you protect yourself. You want to be open with this information to a general contractor, to an architect, that what is going on in the market today. And at Sheffield Metals, we're more than happy to provide documentation. Hey, this is what's going on with the price. And it's really about supporting our customers' businesses as they navigate these difficult times as the world keeps moving forward.
And in such a volatile market, it's so important to have accurate information and up-to-date information. And Majestic Steel, Chris does a great job over there with providing tons and tons of information on a very, very timely basis. Chris, can you tell us a little bit about that?
Yeah, absolutely. We produce a weekly market report. It's called the Core Report. You can go on majesticsteel.com. It's free to sign up for. It comes out every Monday morning right into your inbox. It kind of gives you a snapshot of what happened in the market the previous week, from raw material cost side through supply, demand, pricing, and general economic. We also produce a podcast, the Keep Building podcast. It's available on wherever you can get your podcast, Spotify, Apple, all of the above. We try to keep the market as informed as possible. I figure the better, more informed our customers are, the better it is for Majestic and the industry as a whole.
Yeah, absolutely. And again, majesticsteel.com. And as always, you can subscribe here to the Metal Roofing channel for updates just like this one. Comment down below if you have any questions. We'd love to answer them on a future episode on camera. As always, I'm Thad Barnette, and I want to give a special thanks to Chris Billman from Majestic Steel.
Absolutely. Yep. Appreciate it.
And a special thanks to Adam Mazzella from Sheffield Metals.
Appreciate it.
And we'll catch you next time.